Hello. In this stock pitch, our team of Jasper, Jordan, Henry, Hayden and myself, Elton, will study and break down KMD Brands and Premier Investments Limited's previous performances and actions to forecast and conclude which firm will be the better long-term investment. Michael Daly joined Rip Curl in 2002 before being promoted to Group CEO and Managing Director of KMD Brands Limited. David Kirk's previous executive positions included CEO of Fairfix Media and CEO of Managing Director of PMP Limited. Kirk has been KMD's chairman since July 2013. KMD Brands is a global retailer of outdoor, lifestyle and sports products with B Corporation certification. The group's three signature brands are Kathmandu, Rip Curl and Oboz. On the other hand, Premier Investments is now led by a 9-member board of directors, including Chairman and Non-Executive Director Solomon Liu and Executive Director Richard Murray. The company is a publicly traded firm specializing in retail, importing and distributing goods and currently owns and operates several businesses, most notably the Just Group's brands. As KMD Brands plans to grow the company, investing in the brand's digital infrastructure, retail network and people to maximize the opportunity and ultimately inspire people to explore and enjoy the outdoors. David Kirk and the KMD Brands intend to realize this objective by implementing the following strategy. The 4 pillars of KMD Brands: building global brands, enhancing digital, leveraging operational efficiency, and demonstrating ESG leadership. The company vision of Premier Investments is to prioritize a customer-centric approach, manage a diverse portfolio that caters to various demographics, transform their e-commerce landscape, expand globally, and to prioritize ethical sourcing, supply chain transparency, and environmentally friendly initiatives. Premier Investments' short-term objectives are to achieve sustained revenue growth, as well as to improve operational efficiency, optimize cost structures, and drive profitability across all of its brands. KMD Brands sales have recovered strongly since the COVID-19 setback. As a result, sales, margins, and profitability have all increased for the company. The most recent results for the 6 months ended 31st January 2023 showed a $16 million increase in profitability and a 34% increase in revenue. Experienced management is yet another value driver. KMD's management team comprises 8 senior professionals with substantial retail experience. Sound risk culture is another value driver. Kathmandu was awarded B Corp certification in 2019, which indicates that the organisation follows stringent performance, accountability and transparency criteria in areas such as employee perks, supply chain practices and input materials. Red flags that could affect the company's performance growth. First and foremost, interest rates. Greater interest rates mean greater borrowing costs, which reduces discretionary income while negatively impacting consumer sentiment and sales revenue. In the last year, interest rates have risen significantly, with the RBA cash rate rising from 0.1% to 3.85%. Second, cultural variation, competition, diverse legal systems, currency considerations, and political considerations all pose challenges to international expansion. Gaining market share from established international competitors entails additional risks and costs. Third, a major amount of KMD products are sourced from China. Future pandemics and potential geopolitical confrontations with China may exacerbate supply chain threats, as was seen during COVID-19. As the first value driver, Premier Investments has an excellent management team. The ability of the management team to identify opportunities, handle hurdles like COVID, and adapt to changing consumer tastes has been critical in driving the company's growth and retaining its competitive edge. Second, Premier Investments emphasizes high reinvestment by diversifying its revenue streams and increasing its portfolio by devoting resources to strategic initiatives, capital expenditures, and brand acquisition. Premier Investments maintains sound financial health. Premier Investments' consistent revenue growth, good profit margins, diversified portfolio of well-known brands and successful retail strategies. Red flags include interest rates. Having the greatest ability to derail Premier Investments aims by increasing company debt financing costs and diminishing consumer spending, potentially reducing profitability and limiting the company's capacity to engage in growth efforts. Second, as the retail industry has shown to be one of the largest contributors to environmental damage, failure to satisfy environmental requirements may result in reputational harm, consumer outrage, and legal or regulatory concerns. Finally, Premier Investments may face difficulties as a result of transient leadership. With Solomon Lew pushing 80 years old, top-level management changes might jeopardize organizational stability, decision-making procedures, and strategic direction. There are three growth scenarios of KMD brand and Premier Investments: worst case, best case, and base case. Each scenario is allocated a likelihood of occurrence, as shown in the graphs and tables presented. Because the base case scenario has demonstrated a high possibility of growth between both companies, we will unpack this in the next slide. All value drivers and red flags outlined before for KMD brands are expected to occur along the trend line and in the base case scenario for KMD brands. Over the period 2012 to 2022, KMD brands expected yearly growth in free cash flows was 18.54%. This predicted growth of 18.54% has been primarily created and sustained from 2019 to 2022 by the acquisition of Rip Curl in 2019, implying a less dramatic increase in overall cash flows than previously stated. Due to KMD brands' global expansion ambitions of establishing themselves further throughout Europe, as well as recent discussions of possibly expanding into the Chinese market, changing global market conditions will apply to overseas branches, limiting consumption, revenue, and profit, as operating expenses may be affected by interest rate changes, affecting the company's growth. Although KMD Brands is capable of repaying its short-term debt and current liabilities, as seen by their interest coverage ratio of 3.41, if global market conditions change dramatically, KMD Brands will suffer because their interest coverage ratio is lower than the industry average of 8.9. Rip Curl, on the other hand, is likely to maintain its expanding profitability as it grows throughout Europe, thanks to global consumer trust and loyalty to the brand as a renowned surfing and swimwear brand. These red flags will hopefully be handled by David Kirk and KMD Brand's experienced management team, resulting in an estimated 7.5% increase, with a 60% chance of occurring in the future. Premier Investments' base case sees all value drivers and red flags to continue across their exponential trend line, and is most likely to occur. As of 2022, from 2012, Premier's free cash flows see an estimated annual growth of 23.47%, an increase of 6% in 2022 from 2021, and observable stable trend lines across the company's free cash flows and ratio categories in the previous 6 years support otherwise, suggesting a less dramatic increase in cash flows. Premier's value drivers of great management, strong financial health, and high reinvestment have ensured increased cash flows. In contrast, other red flags include the push for environmental change and the potential loss of leadership. However, compared to the interest rates, these are classified as lower to impact the company, as the environmental processes implemented into production and substantial depth within the management team, assuming Executive Richard Murray could manage effectively, as evident within JB Hi-Fi. As interest rates rise, restricting revenue and profit growth, and as a result, lowering the company's growth rate, which might be mitigated by their debt to asset ratio of 0.27% and financial condition. As a result of Premier's documented financial history, strong value drivers and rising interest rates, an 18% base case growth rate with a 55% probability of occurrence was established. Based on the probability weighted average of KMD's development scenarios, the short-term growth rate was calculated to be 7.9%. The standard deviation of the three growth rates was used to compute the uncertainty rate, which was found to be 2.53%. Impatience was determined at 3.75%, corresponding to the 10-year government bond rate. The short-term discount rate was calculated to be 6.31% by taking both the rate of impatience and the rate of uncertainty into account. As a result, the overall intrinsic value was calculated to be $5.40. By adding the sums of these three scenarios using the probability weighted sum and adjusting for risk, which was calculated to be 0.70 using an online risk test. The following was gathered by applying the same methods to Premier Investments' 3 growth scenarios. That yielded an overall value of $23.46. A detailed analysis of KMD brands in Premier Investments revealed intrinsic values of $5.41 and $23.46, respectively. KMD's intrinsic value represents a 410% upside to its current share price of $1.06, while Premier's intrinsic value represents a 6.8% downside to the current overpriced share price of $25.16. Our value assessment for Premier Investments is approaching the share price, indicating that our general beliefs are closely aligned with the market and that the share price is not mispriced. In contrast, an intrinsic value for KMD brands was calculated well above the market. Our reasonings are based on the following: a strong opportunity and confidence in KMD expanding its store network overseas, a dynamic, youthful, and experienced management team. Also, a continuation of strong growth in the short term of 7.5%. The market undervalues KMD brands and has the greatest potential upside for the share price growth. Thank you.